Hi viewers, this is the second part of my presentation on Union Budget 2026. See, this is with respect to changes proposed in the new Income Tax Act, that is Income Tax Act 2025. See, first we will start with, there are some exemptions they have introduced recently in the new budget. Section 11, we all know Section 11 is the new section in the New Income Tax Act 2025. In Schedule 3, they added 3 more serial numbers, 38A, B, C. 38A talks about disability pension, that is disability pension given to those who worked in armed forces who got disabled due to their service. So for them, the disability pension is exempted. The second one is 38B, that talks about interest on compensation awarded under Motor Vehicle Act. We all know that compensation on motor accident claim is exempt, whereas the interest was taxable. Now they introduced exemption on interest also. Third one, compulsory acquisition. We all know compulsory acquisition, land compulsory acquisition. That is under another act, Declare Act. Actually, that is exempt under that act. To align with that act, they introduced provision in this Income Tax Act also now, that is coming under 38C. Wherever they acquire land under compulsory acquisition, that is exempt. So this is exemption part. Then computation part, in the case of employee contribution. See, previously employer contribution, there are employee contribution, employer contribution in the case of welfare funds, provident fund, ESC and all. As far as employer contribution, we are allowed deduction wherever we paid the dues till the date of filing our return, that is due date of our return. Whereas in case of employee contribution, it is not allowed so. If it is not paid within the due date as per the employee provident fund, it is not allowable. Now they said they extended little bit, even employee contribution wherever it is paid before the due date for filing return under section 263. So little bit relaxation, but it is not at par with employer contribution. In case of employer contribution, we will be able to claim whenever we pay. Whereas this is, again, if it is not paid within the due date for filing the return of income, it gets permanently disallowed. There is no change proposed at par with employer contribution as far as this. The second one is section 70, talking about transfer, like 47, transaction not regarded as transfer. Same provision under section 70, it is in new act. So that talks about sovereign bond transfer. Previously it was exempt only in case of redemption without any condition. That means if we hold it and redeem it, it will be exempt. Now they added one more condition. It should have been held from the date of issue to the date of maturity. So if we buy from secondary market and then we hold it till maturity or sell it in between, there is no exemption. Whenever we hold from the date of issuance to the date of maturity, it is exempt, otherwise taxable. It is not only 2015 series, even subsequent series also is covered now. So that condition is only for individuals only, that too, whoever holds from the date of issuance till the date of maturity, it is exempt. Then one more change, they disallowed some expenses. Normally we claim some expenses against income. In case of dividend, we can claim wherever we have borrowed and invested in shares, the dividend income, against dividend income, we will be able to claim interest on those borrowings. But that is not allowed now, that is taken away. No interest expenses will be allowed against dividend from shares or units from mutual fund. Fourth one, 195, section 195. Previously it was in the old act, we know 115 BBE, that talks about 68, 69A, 69B, C, D, that is unexplained investment, unexplained credit, unexplained assets, expenditure and all. For those, previously it was taxable at 60% rate under 115 BBE in old act. Now in the new act also it continued to be 60 as far as the original act. Now they amended, they made it to tax at 30%. In section 195, the tax rate is reduced to from 60 to 30. This is the income part. Next one, 263, talks about filing of returns. So wherever persons having business income without subjected to audit, that is small businessmen, they can file their return up to August 31st instead of July 31st. They extended the due date from July to 31st August, 1 month. So that is first one. The second one is revised return, filing of revised return. Now they extended another 3 months in case of filing revised return. Previously it was till the end of 9 months from the end of the financial year. Now they extended to 12 months from the end of the financial year, that is tax year. So in case of revised return, we can file even after 9 months, that is before end of 12 months. Within the next year we can file. Third one is filing of updated return. In case of updated return, they allowed even filing loss return also. Previously it was not allowed, only income return we can file, because only income in the updated, in case of updated return, we are allowed to offer more income. Loss return was not allowed. Now they allow loss return also, provided it has an effect of reducing the loss originally claimed. Indirectly it is beneficial to the revenue, because we filed some loss originally. Now we are reducing the loss. So which is as if now we are adding some income. So that is now allowed now. Previously it was not allowed, now it is allowed under 263. Again, in case of updated return, one more change. See, previously it was not allowed whenever we are issued with notices for reassessment under section 148 previously, now it under 280. So now in case of 280 notice, even we receive notice also, that is proceedings have been initiated by the department. In spite of that, we can file the updated return provided we pay some additional tax. Normally updated return also we have to pay additional tax. Along with that, one more tax, another 10% we have to pay. So with that additional 10% tax, we can file updated return even we received notice for reassessment proceedings. That will save us from levying penalty. Now other parties relating to TDS, they have made some changes, proposed some changes in TDS provisions also under section 393. In case of they exempted the tax interest on motor claim accident award, so they removed the provision relating to TDS on those part. Then again, in case of filing form 15G and 15H previously, now they will be notifying new forms under the new act. So this is a relaxation. Instead of giving to each and every company, we can file to the depository for non-deduction of tax, which in turn will file with the prescribed authority as well as the companies. Next one is TCS. Under 394 in the new act, some rationalization have been done. See, in case of TCS, alcoholic liquor for human consumption, previously it was 1%, now they made it 2%. In case of Tindu leaves, it was 5%, now they made it to 2%. Again, in case of sale of scrap, previously it was 1%, now they made it to 2%. So in case of LRS for medical and educational purposes, previously it was 5%, now they made it to 2% now. So in case of tour programs, the TCS rate was 5% and 20%, up to 10 lakhs 5%, beyond 10 lakhs 20%. Now without threshold, they made it to 2%. So this is the changes in TCS. The fourth one is with respect to filing of application for lower deduction, non-deduction. Now they say that we can file it electronically. In turn, that authority will verify electronically also. Subject to satisfying some condition, they will give the certificate for lower deduction. This is the TDS provision related changes. One more, for manpower supply, they included the manpower meaning in the word of work. So now manpower also we need to deduct either 1% or 2% depending upon the deductee. This is the changes with respect to TDS and TCS. Then the next part is with respect to fees for late filing, late furnishing and all. See, wherever that revised return they allowed now another 3 months, instead of 9 months they gave 12 months now. So that 12 months we need to pay some extra fine, either 5,000 or 5,000 depending upon our income. That is one. Then in case of tax audit, wherever we don't file within time, previously it was 0.5% of turnover or 4.5 lakhs, whichever is lower. Now they made it in graded levy. If we make a 1 month delay, it is 75,000, more than 1 month 1.5 lakhs. Then in case of transfer pricing audit also, wherever we make delay in filing the report, for first month it is 50,000, beyond that 1 lakh. This is the late fee related changes. The last one, but not least, this is with respect to misreporting. In case of misreporting, they extended that waiver and immunity to the misreporting also. So the condition is additional 100% tax we have to pay, provided it is paid, we can avoid the penalty and prosecution also. One more thing, in case of misreporting, they added one more class also in the definition of misreporting itself. See, the previously 68, 69, 69 A, B, C, we know that unexplained credit, unexplained investment, unexplained expenditure, unexplained assets, those things also have been covered under misreporting. For wherever the income is referred to these aspects, we have to pay another 20%, that is 120%. Once 120% is paid, we can avoid the penalty and prosecution also. Though they reduced tax rates from 60 to 30, the penalty has been introduced for those things also with additional 20%. These are the changes they have proposed. Let us see when the bill goes for final approval, whatever they bring in. Thank you.